In today's video, I'm going to show you one of my favorite setups. This is the at the edge setup. It's a volatility based setup that you can find easily inside of our stock volatility box scanner. Now, if we take a look at the different at the edge setups that triggered today, you'll find a variety of names inside of the S&P 100. Now, the one that stood out to me was Home Depot, and that's the one I'm going to dive deeper in today's video, but I have a few other examples as well for you. Now, if we start with Home Depot first, this is the overall setup that triggered today. And I'm going to talk about what the at the edge setup is before we dive into price action. The at the edge setup simply is trying to play a move at the edge, a reversal at the very edge of our volatility box models. These are the daily volatility box models. I have the aggressive ones loaded on. And the at the edge setup is playing a reversal from the very outermost level, the outer edge of the clouds, looking to try and play this fade. Now, the reason I like this setup, it's typically where you can find some of the best risk to reward trades. It's where you can risk a little to try and make a lot, very simply put. Now, in today's case, we saw exactly that happen with Home Depot, but I think there were some clues along the way. And I have another example here in which we saw the same setup trigger, but this ended up being a stop out. So I want to talk about the differences between the two. Now, if we start with Home Depot first, I think it's important to start the conversation with the daily time frame. On the daily time frame, if I load in our market pulse indicator, this is an objective way to gauge trend. We can see that we're currently in a market stage of accumulation. If I zoom into recent price action, while the candle was green, it felt like we were more towards the breakout mode, breaking above this 380 zone. So I think right now you could argue that Home Depot a little bit more towards the bullish side, and if not that, maybe a little bit more on the overbought side, since I would argue this is a little bit more choppy price action. Now, if we contrast this with American Express market stage acceleration. American Express, very clearly this market pulse is green and has been green for some time. There's a stronger trend. However, the one thing that stood out to me in American Express and why I still thought this was a good setup, all of these Keltner channel wedges leading up to this setup, which to me is the perfect V-shaped reversal. So I played the bet thinking that we would still see price roll over and maybe tag the market pulse line. Didn't happen today, but that's where having a smaller risk comes into play here. A smaller risk, higher reward. Now let's start with the intraday price activity inside of Home Depot. And I'm going to stick to a 5-minute chart for today's video to keep things simple. But for those of you that are scalpers, the 2-minute offers a lot of clues. Now on the 5-minute chart, we started off this morning. We hit the upper edge of our aggressive volatility box models. And this is where we saw that first little bit of selling, the first pullback in this trend. Now, the first pullback, for those of you that are trend traders, is usually an opportunity to enter for another leg up higher. And that's what we got here. We got the second leg up higher. However, what's interesting is if you take a look at how much higher of a high we made, sure, we did make a higher high, but that wasn't really much of a definitive higher high. Very quickly got rejected. Now, same idea, second leg this time. And usually second leg pullbacks is where you start to see trends fail. If not the second leg, the third leg is really where I've seen trends start to fail, especially once you're inside of the volatility box models. So here we had the first leg, the second leg. Now we made our next move up higher. Same idea, we're making a new high, but each time we're making a new high, we're not doing so in as consistent of a manner as we did in the morning. Now this time we saw that high get rejected. Along the way we had 1, 2, 3, 4, 5, 6 different edge signal confirmations. Now what's interesting is in American Express, we had 1, 2, 3, 4, 5, 6, 7 edge signals as well, but the entire time we're seeing that is while we're forming new highs, and the new highs here look a lot better than the new highs inside of Home Depot. Now, I think a lot of this might be after the fact thinking as well. So how do you spot this real time is, I think, a fair question. And to me, the easiest way is when we form a new high and that candle ends up being red. This was the first time that happened in Home Depot. Then we went on to form a slightly higher high, another red candle. 2 times in a row, and that to me is a sign that, hey, this is a high that's not really being held. Now, to help identify this, I've been working on a new indicator. Let me give you a quick sneak peek. So I'm going to turn the edge signals off so we don't see any other arrows. And I'm going to load in the false breakouts. And here's what we get. So we're tracking the formation of the new highs, the new lows, and each time we make the new high, now let me turn those levels off so we can see this a little cleaner. We can see the different arrows for each time we make a new high, but we're seeing rejection kick in each of those times. Same goes for the inverse opportunities. And anytime we see these double stacked arrows, that's when you also have a little burst of volume on that sell side activity, which is giving you an idea of the dumping. So now when we look at this, we layer on the edge signals indicator as well. All of a sudden, I think this paints a little bit cleaner of a picture. Now, if we take a look to see what ends up actually happening, I'm going to hide the false breakouts indicator for right now. And we see how Home Depot closes after that standpoint. The at the edge setup really helps you get, I think, some of the best risk to rewards. Now let's take a look at the trade entry and exit just so you understand exactly what the parameters are. So the entry 377.65, and that's the outer edge of our volatility box model. So I'm going to use this blue line here to help notate that. So that's where the entry is. Our stop on this particular trade, 379.14. So the stop, 379.14, right here. So that's an idea of the risk that we were giving this trade. And in terms of the target, we're going for 374.68. 374.68 gives us a target slightly below this dashed line here. And hopefully that helps to visually illustrate just how skewed the risk to reward on this trade is and why I really like this at the edge setup. So that's the at the edge setup. It's a way to skew this risk to reward, but with volatility on your side. And if you layer on some simple trend filters, you can see how you can adjust that to work for you. Now let's take a look at a few other setups. Nike was one that stood out as well, and I'm going to show you the false breakouts indicator here in addition to the edge signals. I think combined, they're starting to add a little bit better of a picture, but we can see how this very tippy top, we have that volume confirmation, also sell side activity, false breakout to the upside, not one that we're buying, combined with the at the edge setup, makes for a really nice move to the downside. Nike, also one of those setups here, and if we were to illustrate this out, so Nike, same idea, entry 75.34. We draw that out, 75.34, the outer edge of the clouds. We take a look at the stop, 75.75, and the target, 74.55. So let's draw out the stop. The stop at 75.75 was right here, and the target was at 74.55, exactly at this dashed line. Again, gives you an idea of how you're skewing that risk to reward and you're using the models to work for you alongside confirming these false breakouts. For all of our Volatility Box members, in case you want an early link to this before I upload it on our website, feel free to send me an email. I'm still working on testing it, and then I'll release the tutorial for it in addition to the actual indicator. All right, I hope this video is helpful for all of our stock members to understand what I think is one of the best strategies inside, which is the at the edge setup. It's a way to skew the risk to reward in your favor. You combine this with trend information on the daily time frame, and that really helps to give you an idea of where you might find some asymmetric moves where you can skew that risk to reward in a way where it makes a lot of sense. And if you combine that with the options chain, some of these inexpensive out of the money options end up giving you some really nice returns, some doubles, some triples in the same day. All right, take care, everyone. Good luck trading, and I'll see you in our next update.